Jonas Daly, welcome. Of course, you represent Bennelong Funds Management and the affiliate of your group, which is Key Global Investors. Can you talk about Key Global Investors and their strategy of their investing portfolio?
Absolutely. So Bennelong Funds Management owns an equity stake in Key Global Investors, and Key Global Investors was founded in 2014 and did a JV with Bennelong Funds Management in 2015, and we set up a retail PDS for that portfolio. Founded obviously by Chris Bedingfield and Justin Blaze, who are very well known in the market and spent a number of years on the investment banking side in real estate as well, and did a number of deals across a lot of the larger names that we know in REIT land and also overseas. The portfolio invests predominantly in global REITs. We do have a small exposure in an Australian REIT, but the property side and the exposure of the portfolio is global listed property securities, which is well known as G-REITs.
And what themes are investors looking to tap into with exposure or via exposure to G-REITs or global REITs?
Well, one theme is that we're index unaware, so that allows us to not be wedded by the market cap index, so we can go after the best ideas in the globe, and that can be anywhere from Europe, Asia, and obviously the big assets up in the US as well. We're not wedded to buy what the market cap index kind of tells us to do and in the top 10 and buy into those overinflated prices. So that allows us to be a bit more nimble. We can go into certain asset classes that may not be traditional REITs. So could be storage, data storage, for example, or it could be seniors housing. So that's the type of style. But what the main thing here is there is an element of inflation protection when you invest into REITs. So that's coming through obviously over the long term. In the short term, it does sometimes experience a sell-off in that regard around being a bond proxy for the short term. But over the long term, we see that in a 20-year time frame, it actually has a low correlation to 10-year bond yields in the US.
So the impact on valuations of the current inflationary cycle and rising interest rates, what do you have to say to that?
It has come off with a lot of the broader market at the moment, whether it be global equities, Australian equities, even diversified funds have had a really tough year. But we're well positioned. We're actually buying some really good assets below replacement costs. And that's a big part of the philosophy at Keys. They spend a lot of time on looking at businesses that are currently trading at below replacement costs. And that takes us into obviously some great opportunities in this inflationary environment where the cost to build and obviously labour costs, not just labour costs, but also the supply costs around materials is increasing. There's a number of assets that they're already built and already set up that we can buy and come in and answer at below that replacement cost rather than investing into a developer, which we avoid. We avoid all developers and emerging markets as well for that matter, but we tend to just prefer to come in and buy below replacement costs rather than building assets itself.
Because the average mum and dad investor is exposed to Aussie equities and bonds. What impact will exposure or would exposure to G-REITs have?
Absolutely. Well, first of all, you get the geographical diversification away from, obviously there's a larger weight to Australian assets here, whether it be your own property or whether it be Australian equities. So you're getting access to some of the biggest REITs in the world in Europe and the US and Asia. But also what you're getting is a diversification in certain sectors. So whether it be storage or it could be office, obviously office is in a rebuild and recovery stage. So you're getting that exposure across the portfolio. But what's more importantly is the return from G-REITs over the last 20 years has actually outperformed Aussie equities, global equities as well, and also even gold and infrastructure for the like. So over that 20-year period, G-REITs has been an outperformer and obviously provides that further diversification.
Well, how can international or global property provide a hedge against inflation?
Well, it's obviously around that. Obviously, rents are increasing. In particular, during those high inflationary environments, rents are still going up as we speak today. So that's obviously a key component there. But also buying in below that replacement cost gives us also a nice kicker on the capital side, as well as obviously generating further rent in that particular asset.
Can you maybe talk to some of your 2 or 3 high conviction holdings at the moment to put some meat on the bone?
Yeah, well, there's one that comes to mind in particular in that US housing, that seniors housing market in the US, which is really focusing on the 80-year-old kind of segment, and that's Ventus. It's a group that basically is really geared up for that retirement sector. Obviously, with the baby boomer generation coming through, in 2025 we'll have the first 80-year-old coming through in that baby boomer generation, which provides a great opportunity. We can currently buy that REIT below replacement costs, so it just provides a huge opportunity there with that nice tailwind on that kind of retirement side. And then secondly, Scentre Group, which is an easy one. A lot of people here in Australia can refer to. They're the owners of Westfield shopping centres. Obviously a big beneficiary now as we open up. People are getting out post-lockdowns, wanting to do more shopping kind of offline rather than online. And those retailers are looking to increase their revenues by going back into the large supermarkets. People want to go to the cafes, restaurants, cinemas. They don't just go to those particular assets to just buy particular merchandise. There's also an element of entertainment and getting out there.
So that preference for real life over digital life is actually going through to the bottom line.
It is coming through, and we've seen it obviously too, but even just the fact that online shopping isn't for everyone, but also we're seeing the volumes globally reduce in that particular area.
Jonas, thanks very much for your time today.
Thank you.